important aspect of the monetary policy announced by RBI Governor Shaktikanta Das today is the option for restructuring loans for individual borrowers. Now, this is crucial because remember, a moratorium has been in place since March, now extended till the 1st of September, and everyone was wondering whether there would be a further extension. There is no news on the further extension, but it might not be required now because individual borrowers who have personal loans, which will include educational loans, your housing loans, etc., or any kind of outstanding loans with banks, could have an option of restructuring these depending on what their situation is. This becomes very crucial at a time when jobs are being lost, there is a loss of income, and could come as a relief because this plan looks at a possible restructuring or moratorium of up to 2 years. Of course, there are a lot of conditions. Your account should be a standard account as of March this year. So it can't be that you were already not paying your EMIs, etc., and now suddenly want to avail of this. This is clearly to mitigate your concerns due to COVID-19. Now, there are a couple of important questions which arise from this. Should you be taking this option? What are the circumstances under which you should be taking this option? And that's not the only aspect which is key for individuals from this policy. The gold loan levels have been increased as well. So now you can get up to 90% of the value of your gold as a loan. Should you look at that option? Let's also think about the depositor and not just the borrower. On the other hand, deposit rates have been plunging. So what do these people do? So a lot of things to discuss, and joining me for this now is Harshvardhan Roongta of Roongta Securities and Kalpesh Ashar of Full Circle. Both are certified financial planners. Welcome to the show. Mr. Roongta, let me begin with your take essentially on how crucial this relief will be for individual borrowers. Do you think that there is a need out there right now?
Well, Tamanna, it is definitely the need of the hour, because if you just look at what was happening till now, so if you look at it, the moratorium which was from say March to August right now, the one that is in implementation right now, the biggest concern of all the borrowers was that it's only a deferment. There is no relief that is kind of being given to us. So what was happening is you could go to your lender and say that, okay, I'm availing the moratorium. I will not pay anything until August of 2020. But then what happens after August? Now, the moment September 2020, now the situation so arises that a person needs to either start paying his EMI, and that EMI also is going to increase either in the amount, or it's going to increase the tenure of the outstanding loan because you have not paid anything for 6 months. So this was the biggest concern of borrowers, because if you compound that interest, the loan tenure would possibly go up by about a year or even a little more than that. Just taking 6 months deferment increases the loan tenure by over a year. So what RBI has done at this time is more, a very, very, practical approach. What they have said, in case you're going in for moratorium and you were allowed to now take a moratorium based on your, ability to pay back, etc., all those conditions set in, you will have an option to avail the moratorium for 2 years at to the maximum, which of course is as per the board-approved policies of the bank. Now, what is interesting over here is the accrued interest, whatever interest that you've deferred, you've not paid in that period, will be considered as a separate individual loan, which is not linked to your existing loan. And that the interest that will be charged on that will be lower than, say, just we put it in an example form. If you have a housing loan outstanding, which you have deferred, you say that I want to take a moratorium for say probably a year, for example. The interest that is accrued for that 1 year that you've not paid will be treated as a separate loan, and that the interest that you will pay is going to be lower than the interest that is there on your housing loan. So I think there is some kind of relief, attempted to be given to the borrowers, wherein they don't land up just paying as much interest as they were paying on the original loan. So, it's not only deferment, but some kind of relief as well.
Okay, absolutely. When should you take this, Kalpesh, Ashar? And this is a question that has been on since the moratorium began. where there was a lot of discouragement of taking it because you pay compounded interest. Now you could possibly pay a lower interest rate on the outstanding amount. But what are the circumstances in which you should even consider the option of deferring your loan payment or restructuring it? And remember, this is something that companies do all of the time. Now it's an opportunity for individual borrowers that they did not have earlier.
Yeah, so, on the ground level, if I were to say that, first of all, as a fundamental of this RBI move, let's put it this way, that RBI is worried, but on the positive side, proactive about looking at the actual, worries of the retail investor or the borrower. So starting with the moratorium, which they immediately announced since the lockdown, and it is going to expire in the next month or something. The moves have been very, very proactive, to say the least. Now, if I were to say it at a ground level, and we've experienced it because we are practicing and we have certain people who approach us or clients, that even the process of approaching a bank for a layman for a moratorium was not that simple. So it might sound very good. The feature is great, but it was not as easy as it sounded. Many people have availed of it. So that's a good thing for them. But like what Harsh properly explained, that it doesn't come without its extensions and you paying up a larger amount when actually the tenure is extended up to. Now, if you were to see this in this today's RBI policy, that the word moratorium has not been used, but the restructuring of the loan has been used. It is, again, I don't think it's going to be that simple also. And for a layman, he will again have to go down to the bank, approach them. And the bank also will see the old history of the borrower, the lender will have to check that out. And based on that, he will then work out a restructuring plan and then offer it to the person. From a financial planning perspective, I would say that it's very necessary that either moratorium or restructuring only has to be availed of if your cash flow, your personal income and expense sheet does not permit you to pay that without affecting your normal lifestyle. If you can easily pay your EMIs, or if you can afford to still continue paying your EMIs, my simple suggestion would be don't go in for the restructuring part. Upfront pay your EMIs, because this is going to come with its pros and cons. And in the long term, we've always known fundamentally that a loan, be it of any kind, is a very high, high paying instrument. So a simple advice would be check your cash flows. If your cash flows permit you, if you've not
free
faced
meals.
cash crunch,
no, absolutely. Point taken, Kalpesh.
Continue.
Because there are no free meals. Yeah. There are no free meals, so obviously you're going to have to pay a price for this. The way how this is different from a moratorium is the question of discretion. Mr. Roongta, I want your view on that. Now, how the moratorium was working so far is you either opted in or opted out depending on what option your bank gave you, and you said that I want to take this, I want to avail of the moratorium for XYZ period. There was no questioning on whether you actually needed it or not. Here, the situation seems to be different. There will be discretion applied, discretion of the bank in some form or fashion, who will have to decide whether you truly need your loan restructured or not. Do you see complications there?
Tamanna, what the RBI circular also said very clearly, each bank will have a predefined board-approved policy. So it's not that one individual in the bank branch is going to take that decision. So there is going to be the eligibility criteria, which is going to define very clearly whom can they extend this restructuring offer to, and it is going to be approved by the board at a central level. So yes, there would be some kind of questions about whether you fit into that eligibility criteria or not. But most certainly, it's not going to be at the discretion of one person sitting in the branch. So at least that part is taken away. There's also an expert committee which has been formed, which will give the broader guidelines. So one, we will have indicative broader guidelines given by the committee, the expert committee, which is headed by Mr. K.V. Kamath. And
please continue.
Yeah, so the expert committee will give the broader guidelines and define as to what is the eligibility going to be like, and which is going to be further vetted by the board, and then it is going to be approved. So I think it's very clear. The intent of RBI is also very clear, saying that anybody who wishes to, at their whims and fancies, try and just take a moratorium or just the loan for another 2 months, not meant for them. It's for borrowers who are facing certain cash flow problems because of the COVID related. So there are many industries which are specifically affected to a very great extent, and people have lost jobs. So I think it is aimed at giving those who deserve this kind of moratorium, for that matter, or restructuring of the loan, so that the benefits actually reach to the right person and not being misused by somebody who's just trying to defer the loan for some more time.
Okay, defer the loan or shoring up cash. A lot of people did take the moratorium because they just wanted to shore up cash in times which were uncertain and continue to be uncertain. You don't know what's around the corner. I want to talk about the gold loan as well. And Kalpesh, why don't you come in on this? On, now you get a higher value for gold, and this comes at a time when gold is just shooting up. Prices of gold are just shooting up. How does this work, and isn't there a risk here? Because if someone takes a loan at 90% of their value today, well, gold prices are not going to stay the same. If a vaccine is found, etc., prices could cool off. Then what happens?
So exactly, that's the point. And although the LTV, the loan to value amount, has been increased from the existing 75% to the 90%, and people can have that against their jewelry or ornaments. But it's to be understood that it's being offered by the banks. And let's put ourselves in the shoes of the banker who would want to offer these loans against the gold ornaments. That he will always be skeptical about offering it, because, like what you rightly said, that the prices are at an all-time high. And if there's a positive news, they would be very, very, hesitant to say that, okay, we'll go all out and try to help you with the gold thing. But all said and done, I think it is still a very good option, because as we all know, the hidden secret, I would say, of all Indians is that Indians have stacked up a lot of physical gold with them. And in this time of crisis, if the government is offering them that you come and against your jewelry or ornaments, put them with the banker and get 90% of your value against it. And you can run your cash flow, you can survive for the next 6 months or 12 months against that. I think it's a good option. But again, like the moratorium and the structuring part of it, this also comes with its own pros and cons. So here again, don't go in for a gold loan just for the heck of it, that because it's being offered, you're getting 90%, because there's always a payment price which you pay in a loan, which is going to be really taxing on you if situation doesn't get good in time to come. So we have to see at both the angles and then decide accordingly.
Okay, we keep talking about borrowers in the context of what the RBI said, and the focus is on borrowers because the focus is on tiding people over in time of distress. But I think it's very crucial to talk about savers as well, depositors. Deposit rates are at a huge low, I think lowest in years. And in some cases, your deposit rates are even lesser, your term deposit rates are even lesser than your saving account rates. Mr. Roongta, this is an important question and impacts a lot of people, especially perhaps senior citizens, who now find their incomes and their interest incomes depleted. What are the options for them if they don't want to move to riskier options?
This is always going to be an issue, and we've been talking about this for over a decade now, that all the banking regulations, everything talk about borrowers. I mean, how is the bank going to lend? We want the interest rates to come down. That is, the sole focus at all points in time. And in this entire bargain, we forget about the person who's actually depositing that money, which is going to be lent. So if you're looking at the lending rates coming down, so simultaneously you have to have the deposit rates coming down. So your question is very valid, that there is one set of people who are completely dependent on interest income for their living. So which could be pensioners for that matter, who retired, and there are people who really look only at interest income as a source of income. So how do they go about doing it? So especially senior citizens, as you asked, well, senior citizens have a couple of options available, which is say at 7.4%, which is a senior citizen savings scheme. You have the Pradhan Mantri Vaya Vandana Yojana, the pension policy issued by LIC, that is also available at 7.4%. So, well, there are certain instruments which give you above 7% annualized. And although there are restrictions in that, of course, you can't invest more than an X amount into these products. But having exhausted that bit of your corpus, the other part, you will have to move into the floating rate products. Now, when you move to floating rate products like debt mutual funds, for example, if interest rates were going to come down, you tend to have certain bit of capital gains as well. I understand that this product may not be very well understood by a lot of senior citizens, but I think it's time that after having exhausted all those options, such as senior citizen savings scheme, post office MIS, and etc., you will have to move some part of your money into the floating rate products. You can be on a safer side. I mean, you can look to invest into products which do not take credit risk, which are not long-term in duration and all those things. But I think it's time that you will have to look at some products because there is no other alternative. If you look at any deposits, you will get a return between 5 and 6%. I don't think it's possible to get more than that.
Well, and that's going to be a tough call for a lot of people right now. So maybe time to look beyond the comfort of the FD, especially looking at how the scenario is moving. There was no rate cut this time, but there was a clear indication that the direction is south, and that's great for those who want to borrow, but not too great for those who are hoping to save with banks. We will thank all of you. We'll thank all of you for joining us in this discussion this evening. It's time to take a very short break on the India Development Debate. But when we come back, we're talking about the weather. Mumbai received the heaviest rains and winds in over 4 decades on Wednesday. Thursday has been pretty rainy too. A lot of devastation and damage in the city. But it's not just the story of Mumbai. Are we seeing the impact of climate change? And where is the monsoon headed next? We're tracking the monsoon when we come back.